Okay, in this video we're going to be having a look at how consumers respond to incentives, whether they be positive or negative incentives. So you need to be thinking about part of your assignment, how are you going to offer incentives and how those incentives are going to change consumer behaviour. So when we're looking at the word incentive, we're talking about a benefit, reward or cost that motivates economic agents, so that can be consumers, businesses or the government, or workers, to make specific decisions or act in a particular way. So it assumes people that are acting in their own self-interest and we want to maximise their gains and minimise their pain. So what we're trying to do is inflict increased gains or potentially maybe inflicting more pain for a certain course of action so that we can change people's incentives to act in a certain way. So a positive incentive can also be referred to as the carrot, which basically means like you're giving a incentive for like, say it was like it comes from the idea of a hare or a rabbit, so giving them a carrot as an incentive is a good incentive, or negative incentives referred to as the stick, which discourage people from certain types of actions. So for example, a tax on coal-based energy would be a stick, whereas a subsidy for clean energy would be an example of a carrot. So subsidies for goods with positive externalities and taxes for goods with negative externalities are examples. Incentives may involve financial rewards or penalties, or they can be non-financial in nature, so they don't need to be financial. So an example, at your school, or your teacher or sporting coach may reward you with a prize for exceptional achievement. That would be an example of a carrot. Your parents may have given you a pat on the back or a rise in your pocket money. Again, an example of a carrot. Employees enjoy positive incentives like a bonus or extra pay. They might get tickets to the footy or a promotion for exceptional performance. Or they get a negative incentive like reduced pay or getting sacked from their job would be examples of the stick. Another incentive would be the higher wages available in certain industries, so they will seek employment in those industries, even though they are dangerous and unpleasant. That increased wage can act as a carrot in that situation. Sometimes we get this idea of perverse incentives, where we give incentives and unfortunately those incentives lead people to act in a way that's both unexpected and detracts from the well-being of society. So perverse incentives is when people's incentives change and that leads to unexpected results which detract from society's well-being. A good example of perverse incentives is moral hazard, and that's when people adjust their behaviour in a suboptimal way due to a change in incentives. So they adjust their behaviour in a suboptimal way because incentives change. And good examples of moral hazard is with car insurance. So when people purchase car insurance, they might drive more recklessly because they know that if they crash, the insurer is more likely to bear the costs of that crash. It often occurs, this moral hazard, because of asymmetric information. That basically means when one party to a transaction has more information than the other party. So for example, the insurer can't observe all the actions of the consumer, and therefore consumers may be tempted to act in a way that's irresponsible and ultimately going to have a cost on society. So another good example would be, for example, when you're in an employment contract and you get hired, you may have an incentive to be reckless, and you may have also the incentive to not work very hard because you know you're going to get to keep your job anyway, particularly if you're on like a fixed salary for a number of years. Asymmetric information can also occur because they don't know all the things that you do while you're at work, because they can't monitor your behaviour. So perverse incentives can occur when employees sign employment contracts, because if they may start to not work as hard because the employer can't observe their behaviour, or because they've been employed on a long-term basis. That means that they can't be sacked. Businesses can get around this, however, by offering things like removing unfair dismissal laws, so it's easy to sack people, performance-based pay, so people have the incentive to work harder because their pay is aligned with their performance. Another example of perverse incentives is during the GFC. The banks basically guaranteed to bail out the banks if they ever went into too much debt or became bankrupt, and that led to the banks lending money to way too many people because they knew that if these people defaulted, the government was going to bail them out and save them anyway. So that led to a moral hazard because the change of incentives occurred because they didn't have that financial punishment if the people didn't pay them back. That's an example of moral hazard. Okay. There are incentives can also be used to solve economic problems. So for example, one problem that Australia is facing at the moment is we have an ageing population. Over the next 40 years, the number of citizens between 65 and 85 is expected to double. and the working age population between 15 to 64 is expected to fall from 67 to 60%. So more and more people are entering those older tax age brackets, and less people are going to be in that working age bracket. So the problems with that is it's going to lead to lower economic growth because less people are part of the labour force, and can also reduce GDP per capita because less people are working and earning an income. It can lead to rising labour costs. So the idea is that if more and more people leave the labour force, we're likely to experience skill shortages because we've got less people looking for work, and that can lead to higher wages because there's not enough people to fulfil jobs, and therefore they can demand higher wages. It can also lead to increased government spending on healthcare, aged pensions, aged care, etc., and reduced income tax for the government. So because there's a higher what we call dependency ratio, there's less people working for every person that's retired. That's likely to lead to less taxation revenue for the government, higher budget deficits, and potentially higher levels of government debt going forward. So problems with an ageing population include rising labour costs, increased spending on healthcare and aged pensions, reduced income tax, and lower GDP per capita. In terms of government initiatives to solve this problem, childcare subsidies and rebates. So the idea is to get more people into the workforce, so encouraging mothers and fathers to get back to work quicker by making childcare cheaper will increase the size of the labour force. Lowering income tax rates will encourage more people back into the workforce and provide a greater incentive for the unemployed to find work. So if we lower tax rates, more people will go into the workforce, and therefore we can solve some of the problems with too many people leaving the workforce. The only problem with reducing income taxes is we've already got less tax for the government because there's more people are retired, so it could lead to even bigger budget deficits. But reducing income taxes is one way to try and increase participation in the size of the labour force. Raising the pension age, so older workers remain in the workforce longer, so the pension age in Australia has been increased from 67 to 70 to try and keep people in the workforce. Changes to the system in determining wages, so like enterprise agreements where employees' wages are linked to productivity. So the idea is that by paying people based on their performance, people will work harder and therefore generate more production, and that will help solve some of the issues with the reduction in production from people leaving the workforce. So if the existing workforce is paid based on performance, they'll work harder, generate more production, and that will solve some of the issues from the decrease in production from people leaving the workforce. Thank you.